I'm Osborne Foreman, and in this week's video I'm going to give you a portfolio update. I felt that today I wanted to do a different kind of episode where I haven't scripted that much, and I really wanted to just express my mind, what I'm planning to do with the portfolio, and the changes that may happen over this time period. And if you like the video, please drop one of these to support the channel to beat that YouTube algorithm. According to Google Finance, the FTSE 100 is up 0.45%, the FTSE 250 is up 0.56%, and the S&P 500 is down 0.19%. Much like my hair, there's no product in it and I could not be bothered today. My portfolio, however, at least this week, some would say that it has outperformed the markets. In that regard, if it has outperformed the markets, that may look like a good thing in my view. However, I disagree. My portfolio is up 4.11%. However, I feel that the week time span is too short of a time horizon to really accurately gauge or track portfolio performance. That's because I underperformed last week and the week before. So yes, this 1 week I've outperformed a fair bit. It doesn't mean that overall I'm doing well. And in fact, on my spreadsheet, I'm actually underperforming my 4 main benchmarks. I've explained before why this isn't accurate, as it's simple returns versus dollar cost averaging, which I'm doing, and therefore I'm at a massive disadvantage. I'm only outperforming the FTSE 100 with my overall returns. I'm behind the 250, the FTSE 250, the S&P 500, the AIM 100, and even the NASDAQ 100. But that's okay, because I can't expect to be achieving this in my first 13 months of investing. I can't expect to get amazing CAGRs or compound annual growth rates on my entire portfolio from the get-go. Instead, I'm expected, or I'm prepared mentally, that the first few years may be very slow, maybe even decade. If this is slow, hopefully I can absorb as much information as possible and learn these possible opportunities that are brought towards me and that other investors may experience at the same time. For example, Boohoo, buying on the dip with the ESG or ethical, social and governance drop may have been a good, valuable learning opportunity in which you research the stock, you build up your confidence, and then decide whether that is enough confidence to continue buying the drop. I know that overall, from buying that dip last year, that I'm up a fair significant margin, and it is what brings up a majority of my portfolio, as it has a majority of the returns. But that is also due to position size, as it is by far my largest position, as I hold 2,500 shares of Boohoo. And over this time period, I think that my strategy is certainly adapting. When I first started, for instance, I felt that I had to have at least 2 companies, I don't know why I put 4 fingers up, 2 companies from every individual sector for adequate diversification. Whereas now I feel that diversification is protection against ignorance. So, because I don't see the full case or the full bull case for Bitcoin, I have an exposure to it. Primarily, my exposure to Argo blockchain is different. I believe in the business, perhaps maybe not the long-term prospects of Bitcoin. However, my thoughts are changing on it. The idea behind this is that if I'm wrong about Bitcoin and it does continue to go up and it becomes a well-adopted currency, then I have exposure to it and I'll make money from that change happening. Whereas if I am right, well, if perhaps Bitcoin doesn't do well, then sure, I have a position, but it's not my entire portfolio, although it is a large portion of it now. It's still only roughly 15% of my portfolio, and oh well. Since I'm at an early stage, don't forget I have a low overall portfolio value, and so I can afford to take this loss should for whatever reason it goes down. And so that's something I can be comfortable with. If I had a £1 million portfolio, absolutely not would I be staking, yeah, because it would be more of a gamble in reference. I would not be staking 15% of that overall portfolio on something that perhaps I don't have long-term beliefs in. As I said, I do believe in the company of Argo blockchain. I do believe they have competitive advantages over the likes of Marathon and Riot. I do feel that there are going to be able to build a significant moat, and that because they have the highest margins that I've experienced, that they're going to do well, providing that Bitcoin holds up as an asset, which I don't know what will happen on that. I'm not going to predict. Rather, I'm going to stay invested, and if perhaps my mindset changes, then it's best that I would just sell that position when the time comes and treat it as either a learning experience, be it costly or perhaps profitable, which I'm inclining to hope for and believe in towards. I think I'm now moving my strategy towards the smaller capitalizations. When I first started the YouTube channel, I was looking at large cap stocks in the UK, the likes of RDSP, Shell, sorry, that's the same company. We've also got the likes of the London Stock Exchange Group, which was a £40 billion company on market capitalization. Whereas now I feel that a majority of the gains can come from the smaller companies, but that's not without added risk, because I remember that when starting, a lot of people were telling me you should take a look at the AIM markets. And because I feel that I've learned a lot about the FTSE 100 and the FTSE 250, I've looked for the qualities of these companies, especially during the pandemic crash, of what would make a good company. And so when I look at these AIM stocks, I'm not saying I'm amazing at detecting good stocks by any means, but when I look at these stocks, I might see that a company is unprofitable, but then I might see a positive free cash flow and an amazing balance sheet with no debt and a lot of cash, and I may think, well, this is clearly, a lot of people might disregard this stock as a penny stock, but I see the value in this. I believe in the long-term potential returns of the company and the growth in the industry that they're in, and that might be an opportunity that I would take to buy. Although perhaps more on the contrary side of this whole point is that my best performing investment is one out of the FTSE 100. For instance, that is Ashtead Group, and it is up 81.14% since I started investing in this stock in June 2020. Or around about 10 to 11 months ago. Ashtead Group is a phenomenal company, and in the last decade they actually outperformed the likes of Amazon in share price movement. But then 10 years ago they were also a much smaller company, and they were riddled with debt, meaning they had lots of debt and were perhaps a more riskier investment, maybe even more on the side of a gamble. I feel that majority of the returns are from the small caps. I'm not going to go so small into micro caps where they're perhaps a £5 million company and there's not much information on them or I don't understand them properly, but rather I will try to identify the companies that are worth a few £100 million and then put my money into the winners, which would bring me onto a stock that I currently hold, which is Halma. I've discussed this countless times and you can tell that my sentiment with this stock has changed. I think there's a final nail in the coffin with this investment, and that is the likes of their size. This is because whilst yes, they've had an excellent past performance, although historical returns do not equivalate the likes of what's going to happen in the future, or it won't be the future returns, it's simply not going to continue. This is a business that had compounded from a very small size. They reward shareholders with a dividend, which doesn't go with my investment strategy anymore. But I feel that because they've grown and grown in size, their free cash flow has increased dramatically. It's a lot easier to invest a smaller amount of free cash flow as you're able to buy assets that could get you a lot more value. Whereas when you've got 200 to 300 million pounds of free cash flow on an annual basis, I haven't looked at Halma's stats for this, then it becomes a lot more difficult. And recently, I believe they made an acquisition for a software technology company in the US that was for the likes of midwives, and perhaps it sent a signal or notification to the midwives on an event that someone is having a baby. I didn't look too deep into this, but I feel that they're going into the US markets and paying through the roof for it, as it is one of the most overpriced industries in the world, as it is in the US. And I feel that perhaps this isn't worth it anymore, and instead I might reinvest, or I'm very likely to, with my remaining 20 shares of Halma, which I have on the Freetrade app. If you'd like to sign up to Freetrade, I'm going to leave a link in the description down below, as you can get a free share worth up to £200. But with the likes of Halma, I'm going to reinvest this into a much smaller company, a company that might be seen, or you could look at, as an early stage Halma. I want to look for the same qualities in management. I want to see great returns on equity, capital employed, or even assets. I'd like to see companies that are consistently profitable but also predictable. And I feel that if I can look for those traits and learn what I have from Halma and find that in a smaller company, which, don't get me wrong, I believe that'll be a very difficult thing to do, as if they were as good as Halma in a way, surely they would be valued a lot higher. But currently Halma is at an expensive premium. I don't doubt that in the future, perhaps the next 5-10 years, they will continue to do well and outperform the markets. For instance, for the rest of my lifetime, they may continue to outperform the markets, providing the current information on the business stays the same. But I feel that my money could be put best elsewhere. Whilst recently I had been investing that into Argo blockchain, as they did have a 40% dip in the last month, which is for the most part recovered, I may not continue doing that. And whilst I did invest £125 from my weekly deposits into Argo blockchain this week and then missed out on the dip on Friday because I bought on Thursday, I feel that perhaps now I'm reaching the top size of this position. I may make the share overall position 3,000 shares, but I feel that I don't want to get too overexposed to this. This position is becoming very close to the value of my two long-term holds, or my most highest conviction stocks, Games Workshop and Boohoo. I feel for that reason, they should definitely have a higher exposure. For instance, so let's say Argo blockchain does climb. Let's say it lists on the NASDAQ and it does get a valuation similar to Riot and Marathon. That's probably a 2 to 3 times potential. Let's assume it's 250% gains. We could be looking at a position that is far bigger than the likes of Boohoo and Games Workshop, and at that point I would very much have to consider trimming the position size to reinvest into those other companies. But I also feel that despite in the last year with Boohoo and the ESG crashing the share price, that Boohoo and Games Workshop could be the core of the portfolio. Similar to the likes with Team 17, a stock I've not spoken about in a while that I currently hold 203 shares with. I feel that because these companies are around, well, and the likes of Team 17, they're very close to a £1 billion valuation. They've been volatile and floating around it. But I feel that these would be the core positions in the portfolio, whilst someone that invests only in FTSE 100 companies might think that's insanely risky. I have a lot of conviction in these investments, and therefore would feel that if I have my portfolio in that and then invest into smaller cap stocks, for instance, one that I would 100% buy if it was on the Freetrade app is BOTB, best of the best. I would likely invest other positions into these smaller cap companies, and I feel that that's how my investment strategy has changed. And maybe because obviously my first year performance, which was only around 20%, despite having an amazing year in the markets and everyone had done pretty well, I feel that maybe this could be the pivot in my strategy that could be a great winner for the long term. I'd like to mention that I also have a Patreon, and so if you're interested in that, I'm going to leave a link in the description down below where you can take a look. And as for the overall holdings, Ashted Group, I will be letting this winner run. I'm going to see what it does, and I'm going to continue to keep my money in it, as I would still very much value buying this company at the current valuation, as they are of high quality. Halma, however, I don't agree with. I mentioned before, I'm going to try and reinvest this money into a new position. I don't necessarily want to put this into Argo blockchain because I don't want to overexpose myself to that position, but I might, with the limit of 3,000 shares with Argo blockchain. And then I would look to build another position with that money, providing no other one of my holdings shows sufficient value. The likes of Boohoo is one that I'm very happy to keep my largest holding, although I wouldn't mind if Games Workshop did become that also. I'm very much happy with both of these investments, and with the likes of Games Workshop, recently I got a dividend income of around £32, which is nice to see because I did transition away from dividend investing to more of a growth style investing, but it is nice to get that income from time to time. So I may perhaps try and balance out the size of both of the holdings and then keep investing continually and keep the positions quite level. You've got one that's a very strong growth stock in the UK being Boohoo, and one that's perhaps a strong company with fantastic management but also a good dividend payer to sort of balance out our entire portfolio. Perhaps I'm massively overthinking things. Perhaps I'm wasting my time or breath in talking about it as a whole. But I feel that with these adaptations to the strategy in my portfolio that I have with Freetrade, that some positive changes can be made. But then again, there is another thing where, or at least a quote, which I don't know off the top of my head, but hopefully you'll understand what the point I'm trying to make with it is, and that's because people are constantly trying to adapt their strategies, they never commit to one strategy, and that means that they're constantly underperforming because they never truly learn how to make the most out of their one strategy. And I believe something Warren Buffett had said relates very much to this, although I really should have researched this prior, but as I said, I'm not using a script. Interestingly, even though Argo blockchain is obviously my third largest holding, it is at the moment my worst performing stock, but it's incredibly impressive to see how far it's come just in the last week or 2 weeks alone. And so I'm happy to continue with my equity in this position, and I believe over the long term, and hopefully because it has at least pushed up my portfolio by 5% in returns alongside my other holdings, and 5% returns were about, considering I did my returns up until the tax year, which is April to April each year, I think there's a lot of potential to come in the future. I'd like to thank you for watching, and if you're interested in how I got or what my net worth was at the age of 21 and how I track it, click the card at the top right of the video. Once more, thank you for watching. I was Foreman. Have a fantastic day.